Hello again and welcome back to London. There's been some real volatility injected back into the market, so where should you be putting your money right now? Well, I'll be discussing some trading ideas with Miles Eakers, who's also got some news about his new company. Okay, Miles, we've spoken many times in the past. Previously you were at Savvy, now you've started your new project here. Imagine I'm Peter Jones on Dragon's Den. Sell the idea to me.
We're basically looking to find the best trading talent out there and then allocate capital to them. We've devised quite a good test of basically assessing how good traders are. And what we've really noticed is that most traders aren't very good at the risk side of trading. They're good at potentially predicting direction, whether or not the euro is going to go up or down. But because of risk, the psychology behind that, they tend to lose. So what we're trying to do is basically take those traders, take the guys that are good at predicting direction, and then use our back-end risk system to basically enhance their profitability. But
what's your angle? How are you guys going to make money?
Obviously, we'll be taking a cut of all the money that we make. It's very much like a fund would be in terms of any performance that we get, we then give a percentage back to the trader, and then obviously we keep some of it to ourselves.
Yeah. Often when I look at websites like yours, I scroll to the bottom and there'll be some text saying this company is regulated by the FCA, blah, blah, blah.
Yeah.
Also, that wasn't there on your website, and I clicked on the contacts and there was no address for your company. Are you transparent enough, and why aren't you FCA regulated?
Yeah, so we're a new prop fund at the end of the day. We're trying to keep costs low. As a result, we haven't got a swanky office, and we're quite open about that. In terms of the FCA, we are only trading our own funds, so we don't need to be regulated. We're not managing anyone else's money. The overall goal within the next 6 months to a year, though, is to become regulated and then obviously have the nice swanky prop trading floor as well. But to start off with, we're trying to keep costs low and then trying to basically get the good talent and then start growing once we've found them.
Yeah, just to finish off on this part of the interview, you say that you use certain risk management systems. Could you expand on what those systems are?
Yeah, we've partnered up with two young, I'd say, entrepreneurs who've basically developed quite a good system. They're called Norman. It's basically behavioural science, and it looks to basically assess traders, and when they're doing well, obviously aggressively compound and grow behind them, and then reduce the exposure on the bad traders. So for us, it's a lot of banks have their own risk departments. Why don't prop traders have that? As an individual trader, I remember you'd be trading and trying to predict direction, but also managing your own risk. So what we're trying to do is take that away from the individual trader and say, look, just predict direction, we'll do the rest. Sure.
Well, let's get on to the market stuff. Generally, the consensus has been in terms of the major trades, long US dollar, short the euro, which probably means that you're going to say the complete opposite, which is generally what you've done in the past.
Well, I have been saying short euro for a while, and it's getting a little bit hairy when we're up near 138, 140. I think there is a clear monetary policy stance between the US and Europe, and that is interest rates to go up in the States and then to go down in Europe or stay where they are. I'm looking at Europe, I'm looking at the UK, I'm looking at America at the moment, and there is going to be an effect of a 40% devaluing of the euro against other currencies. You should get the export-driven growth that a lot of Europe wants, some inflationary pressure as well. But I still think at the moment there is a clear direction for euro to go down and test parity. We're so close now, it'd be silly not to. Unless the data starts improving in Europe, I see further downside in euro. I do like taking some speculative counter-trend trades though when euro starts trading new yearly lows. I think potentially we've seen some euro against sterling hovering around this 140 area. I think it's not a bad place to be maybe selling sterling against the euro, and also potentially picking up euro dollar around the 105. I think we're trading around the 106 at the moment.
Well, thanks to Miles. He's always got some interesting takes on the market. Stay tuned to Dukes Copy TV for more interviews and analysis, but for now, goodbye.